Good morning, everybody. My name is Emma Crawford, and I'm the SMPH Director of Financial Wellness and Financial Aid Advising at the University of Wisconsin-Madison. And I am super, super excited to be recording this presentation on public service loan forgiveness. And more specifically, I'm going to start by doing a really brief overview of public service loan forgiveness. And I'm also going to talk about the limited PSLF waiver as well, just because that is very time sensitive. And I know that there are a lot of questions and comments about it. So I'm going to spend some time talking about that as well today. Just a quick introduction about who I am. Like I said, my name is Emma, and I work as the Director of Financial Wellness and Financial Aid Advising at UW School of Medicine and Public Health. It's a really amazing, unique split role between SMPH and the Office of Student Financial Aid. I have my master's degree in counseling psychology from the University of Minnesota, and then I also have a graduate certificate in family financial planning from Iowa State University. I'm an accredited financial counselor, and I am also a candidate for the Certified Financial Planner credential as well, which is super exciting. So I've completed the education requirement. I've met the 6,000 experience hours requirement as well. And now I just need to pass the exam in March of 2023, fingers crossed. And as you'll soon find out too, I am a self-described PSLF and student loan nerd. I love helping people with student loans and navigating public service loan forgiveness. And I'm sure that my passion will shine through today. But I'm really excited to be presenting on this today. And I hope that you find this presentation helpful. Like I said, I'm going to start by giving a very brief overview of public service loan forgiveness. In the second part of the presentation, I'm going to do a really kind of deep dive overview of the limited PSLF waiver and what that means for student loan borrowers. Then I'm going to go in depth in terms of what tangible to-do items you may need to do for the PSLF waiver. And then at the end of the slideshow, I have some common FAQs that I've received over the course of the past few months of doing these presentations. And then I have a lot of helpful resources linked as well. So every resource that I've included in this presentation has been personally vetted by me or even used by me personally. And as I go through the presentation, be sure to keep an eye out for these little yellow flash icons. These are some quick tips throughout the presentation that are meant to offer helpful guidance to help you maximize forgiveness through PSLF. So I tried to include things in this presentation that are maybe less well known, but things that can really help you maximize forgiveness through public service loan forgiveness. As a quick disclaimer, the contents of this webinar are based on what I know to be true today, which is Tuesday, August 23rd of 2022. This presentation is for educational purposes only and should not be used as tax, legal, or financial advice. Additionally, as we already know, based on everything that we've seen in the past 2.5 years, things can and do rapidly change as it relates to federal student loan policy, repayment, and the PSLF program. The linked resources I've included at the end of this presentation may help loan borrowers stay up to date on any changes and updates that may occur after this presentation. But let's begin, folks. So like I said, we are going to start by doing a brief overview of public service loan forgiveness, or PSLF for short. So I'm going to talk through the different features and components and requirements of the program. With that said, it gets a little bit confusing because many of the requirements for PSLF that I'm about to share have been temporarily waived due to the limited PSLF waiver. So as a friendly reminder, the limited PSLF waiver is currently in effect until October 31st of 2022. I'm going to discuss that in greater detail in the second half of the presentation though, where I'll show a side-by-side comparison of the typical or normal or long-standing requirements of PSLF, and then which requirements have been waived in the limited PSLF waiver. And I've also linked a really helpful page on the studentaid.gov website, which has a lot of really great and thorough information about the limited PSLF waiver. But starting off, what is PSLF? Public Service Loan Forgiveness, or PSLF for short, is a program that forgives the remaining balance tax-free on direct loans after someone has made 120 qualifying monthly payments under a qualifying repayment plan while working full-time for a qualifying employer. This on its face seems really straightforward, but it's actually pretty confusing. And so I'm going to do a deeper dive into each of those bolded requirements. I've also linked a really helpful page that provides really great information about public service loan forgiveness and the different components and requirements. PSLF has been in effect since October of 2007, and October 2nd of 2007 is the earliest date a loan borrower could have made their first PSLF eligible payment. One of the most confusing parts about PSLF is that you need to have the correct type of federal loan in order to be eligible, and that's any loan received under the William D. Ford Federal Direct Loan Program. So examples of these types of loans include direct unsubsidized loans, direct subsidized loans, direct consolidation loans, direct grad plus, and direct parent plus. If you are someone that has loans from an older program, and I know I had these Perkins loans, if you have Perkins and or FEL or FELP loans, those are not direct loans as they stand today. However, you can consolidate them on studentaid.gov in order to convert them into direct loans. So that way they qualify for public service loan forgiveness. And I'm going to talk a little bit more about the consolidation process in the latter half of this presentation. Many people are not quite sure what type of loans that they have, and that is super okay. That's really common. If you are curious as to what types of loans you have, I recommend going into your studentaid.gov account, looking through your loan types and looking for direct, FEL, or Perkins in the loan name. If you see direct, that means that that loan's good to go. You don't necessarily need to consolidate. But if you have FEL and or Perkins loans and you would like for them to be eligible for public service loan forgiveness, then you do need to consolidate them. And anytime someone consolidates, it takes the loans that you consolidate and converts them into a direct loan. And really quick tip of advice, and I'm really going to emphasize this later on as well, is that if you do have FEL or FELP loans and or Perkins loans, you absolutely need to consolidate them by October 31st of 2022 in order to take advantage of the limited waiver, which I'm going to talk about in a little bit here. Unfortunately, private loans do not qualify. And so if you are someone that maybe privately refinanced your federal loans a while ago, back when interest rates were super low, unfortunately, there is no way to undo that. So private loans do not qualify, and you cannot convert a private student loan to a federal student loan. Additionally, if you have federal student loans that you have already paid off, those also do not qualify for public service loan forgiveness. So PSLF only applies to outstanding loans. And like I said, I cannot emphasize this enough because this is a part of the limited PSLF waiver, is that if you have any outstanding FEL or FELP or Perkins loans, you absolutely need to consolidate them on studentaid.gov in order to convert them into a direct consolidation loan by October 31st of 2022 in order to benefit from the limited waiver. And like I said, I'm going to do a really thorough dive into what consolidation is and what it means and how it works and where you do it in the second half of this presentation. A really common question I get is, are Parent Plus loans eligible for PSLF? And this is where it gets a little complicated, and that's why I've linked a really helpful page on this on the slideshow as well. So that way you can also look up more information and more details about this on studentaid.gov's website. Technically, yes, Parent Plus loans are eligible for public service loan forgiveness, but they need to be on the income contingent repayment plan, which I'm going to talk about in a second here. So in order to make PSLF eligible payments, you need to be on a correct repayment plan. And most people, as they're pursuing PSLF, are on an income-driven repayment plan. And the ICR plan is a type of income-driven repayment plans. It's really odd because as a Parent Plus loan stands on its own before even consolidating, it's not actually eligible for the ICR plan. You have to consolidate the Parent Plus loan in order to convert it into the right type of loan so that it becomes eligible for the income contingent repayment plan. So if you have a Parent Plus loan and you want to pursue public service loan forgiveness but haven't yet consolidated, you should do so ASAP. And like I said, there's a lot of helpful information on the website that I've linked here. And I'll also talk in a little bit more about consolidating Parent Plus loans. And just as a reminder too, Parent Plus loans are loans that the parent takes out in their name on behalf of their student. And so the parent is the one that needs to be completing all of the requirements for public service loan forgiveness, including eligible employment. So it's not the student that needs to be working at a 501c3, for example. It's the parent's job that matters. So the parent needs to be the one completing all of these different requirements for PSLF. Another common question I get is, are joint spousal direct consolidation loans eligible for PSLF? And yes, they are, but both spouses need to be meeting the employment requirements and the other requirements for public service loan forgiveness at the same time. If only one spouse was meeting the employment requirement, the linked website states that only a portion of the remaining balance attributable to the original loans of that spouse would be forgiven. And I know that it can be really confusing if you do have a spousal direct consolidation loan. So if you do have questions about this, I really recommend checking out the hyperlink on this slide for more information. It's really important that as someone pursues public service loan forgiveness, that they ensure that they continue to make PSLF qualifying payments. And their definition is that includes any payment made after October 1st of 2007 under a qualifying repayment plan, which I'll talk about in a second here, for the full amount due as shown on your bill, no later than 15 days after your due date, while you are employed full-time by a qualifying employer. And I'll talk about qualifying employment in a second here as well. This is really important. You cannot make a qualifying monthly payment while your loans are in an in-school status, which is when you are enrolled at least half-time. And that definition of being half-time depends on the program that you're in. You also cannot make a qualifying monthly payment while you're in a grace period, when you are in a deferment, including an in-school deferment, or during a forbearance, with the exception of the current COVID forbearance. So the Department of Ed has clarified and verified that the time that we all have spent in this COVID forbearance, which went into effect on March 13th of 2020, time spent in this ongoing COVID forbearance does indeed count towards PSLF, even though we haven't been making any payments, but you still need to be in a proper payment status, meaning that you need to be in the COVID forbearance rather than an in-school deferment or a grace period, for example. And you still need to be working full-time for a qualifying employer. I unfortunately made a mistake with my loans. And so I want you to learn from my mistake. And this is really important for those of you who are working full-time and might be in school as well. So if you are working full-time at an eligible employer, but your loans are in an in-school deferment, please, please, please call your loan servicer to ask them to cancel the in-school deferment. So for my personal situation, what happened is when I went back to school during this COVID forbearance, I was enrolled in 6 credits. And for my graduate certificate program at Iowa State, that was considered half-time. And so anytime someone is enrolled at least half-time, they are usually automatically put into an in-school deferment period. So my loans from undergrad and my previous master's program went into an in-school deferment period, even though it was during the COVID forbearance. So because I didn't catch that proactively, the 1 year that I spent in an in-school deferment, unfortunately, does not count towards public service loan forgiveness. It's really frustrating because we're in this COVID forbearance period anyway, so it's not like I would have been making payments. But unfortunately, after talking to my student loan servicer, they did confirm that they can't retroactively remove that in-school deferment. So it's really important to call them ahead of time, fill out the necessary paperwork, and then they would be able to get that in-school deferment canceled. So please learn from my mistake. Really important quick tip for those of you who are at least enrolled at least half-time and are working full-time in a qualifying employer. One of the most confusing parts about public service loan forgiveness is knowing which repayment plan qualifies, or which repayment plans qualify. And that's because there are a handful of different repayment plans, but not all of them qualify for public service loan forgiveness. So only a few of them do. The standard 10-year repayment plan qualifies, as do any of the income-driven repayment plans. So income-driven repayment plans is the umbrella term, and there are 4 options for folks. So there's the pay-as-you-earn, the revised pay-as-you-earn, the income-based repayment, and the income contingent repayment. Your monthly payment will be based on your income rather than your debt level, and they usually range anywhere from 10% of your income to 20% of your income. And so your student loan servicer typically calculates those payments using some sort of income documentation, which usually ends up being a recent tax return. Really, really important that once this COVID forbearance ends, and it is supposed to end next week, which is pretty amazing that we're getting down to the wire here. I am expecting it to be extended, by the way. We just haven't heard anything yet, so I can't officially say that it has been extended. But if you were not on a income-driven repayment plan before the COVID forbearance, you absolutely need to make sure that you are on an income-driven repayment plan once this COVID forbearance ends and you are put back into repayment status. I have a lot of really helpful links coming up about how to simulate what your monthly payment will be. And a quick tip of advice, the thought behind public service loan forgiveness is to get your loans forgiven at the end, right? So the thinking with these income-driven repayment plans is that you want to choose the one that offers the lowest monthly payment in order to help maximize forgiveness at the end. Quick tip, if you did, as a friendly reminder, like I said before, payments have been paused for most federal loans as of March 13th of 2020. If you elected to continue making payments on your loans during this COVID forbearance, but you're also set on pursuing PSLF, I recommend asking your loan servicer for a refund of all payments made after March 13th of 2020. Because those payments that you made will not help you reach forgiveness earlier. Even though, for example, I have totally stopped making payments on my loans since March 13th of 2020 as a result of the ongoing COVID forbearance. If I ignore that part of this COVID forbearance that I was in an in-school deferment, the rest of this time has counted towards PSLF for me if I were pursuing public service loan forgiveness, even though I'm not making any payments. You just need to make sure that you're working full-time at an eligible employer, which I am because UW system does qualify, and that you are in an in-school not an in-school status. Ignore that. You need to make sure that you are in a correct loan status, like the COVID forbearance. So if you did elect to make payments, but you want to pursue PSLF and want to maximize forgiveness at the end, I recommend reaching out to your loan servicer and asking them to get a refund. They'll typically have some paperwork that you need to fill out, and that can take anywhere from 30 to 60 days to be processed. But I have heard from folks, that have had great success with this. So I really recommend looking into this. What else? Okay, I think that's good for now. But like I said, really, really important to be on the correct repayment plan. This is where I see a lot of errors happen. So oftentimes folks are not on the correct repayment plan. So once this COVID forbearance ends, please make sure to get on one of the income-driven repayment plans. And studentaid.gov has a really helpful loan simulator that will take your loan information into account. It will ask for income information, and they will help simulate what your monthly payments would be under each of these plans. A quick note about these income-driven repayment plans is that everyone is eligible for at least one of the income-driven repayment plans, regardless of your income. So even if you have a higher income, you are still eligible for income-driven repayment plans. Everybody is eligible for at least one of the IDR plans. If you do have a higher income, there's a chance that your payment will be higher. So that's just something to note, that if you do have a higher household income. And depending on your income, it's also possible for payments to be as low as $0 while still counting towards PSLF. And I really wish more people knew about that, because I see this happen where folks can't afford the monthly payment underneath the standard plan, and they may end up going into default because they can't afford the monthly payments. If you cannot afford your monthly payments, it's really, really important to reach out to your loan servicer and ask about the eligibility criteria for the various income-driven repayment plans. Because if your income is low enough, it is possible to get a $0 monthly payment and have that still count towards PSLF, because the income-driven repayment plan that you are on has clarified that a $0 payment is what you can afford. And so that does count towards PSLF. And like I said before, in order to maximize PSLF, you should get on the income-driven repayment plan that offers the lowest monthly payment. And I linked that loan simulator here that you can log into. It will pull in your loan information and help simulate what your options are. Quick tip of advice: if you are ever on an IDR plan and you experience a decrease or a total loss of income, please call your loan servicer to let them know, because they can help lower your monthly payment. I see this happen a lot too, is that especially during COVID, when the economy took a huge hit and many folks unfortunately lost some of their household income, really important to proactively reach out to your loan servicer and let them know if your income ever decreases for whatever reason at all, because they can look at recalculating your monthly payment while you're on an IDR plan and hopefully decreasing that monthly payment for you. While you are pursuing public service loan forgiveness, and when you ultimately apply for forgiveness at the end of those 120 payments, you need to be working full-time for a qualifying employer or part-time at a combination of multiple qualifying employers. This is the definition of full-time work that studentaid.gov uses on their website, and I've quoted it directly. It says, for PSLF, you're generally considered to work full-time if you meet your employer's definition of full-time or work at least 30 hours per week on average, whichever is greater. And keep in mind that it's the employer that counts for PSLF, not the specific job title. So for those of you who are watching this and you work at UW-Madison or UW-System, UW-System is a PSLF eligible employer regardless of your role and title. So I work in financial aid, I qualify. Someone who works in housing would also qualify. Someone who works in administration, they qualify. Someone who works in transportation services, they qualify as well. So it's the employer that matters for PSLF, not the job title. Is there anything else I wanted to say on this slide? Okay. So qualifying employment is super, super important. And they have a really helpful PSLF employer search tool that I've linked in a few slides here. So if you aren't sure if your employer qualifies, please use this PSLF help tool to verify your employer's eligibility and or to document your PSLF eligible employment history if you haven't already. So this is very important. And whenever I'm working with an alum or a student, it's really important to, what I recommend doing is to fill out the help tool at least once a year to help track your eligible employment as you go along. It is possible to backtrack your employment history tracking. So for example, if you have maybe been working at a PSLF eligible employer like UW-System for the past few years, but you haven't yet documented that, and you haven't yet used the PSLF help tool to document it, that's totally okay. You can backtrack, because the form, I showed a screenshot here of the first page of the form, but the second page will ask, or it will show information about your start date, whether or not you're still working there, and if you aren't still working there, what your end date was. So it can help backtrack employment history. However, I don't want someone to wait until they've made 120 payments to start tracking this. So what I recommend to all of my alumni and students that I work with here at UW is to be filling this out at least once a year while working for an eligible employer, because anytime you submit this form to MOHELA, they will then update your PSLF qualifying payment count. So this is how they count along the way how many payments you have. The PSLF help tool is really great because you can enter in your employees or your employer's identification number or taxpayer ID to look them up. And if you're not sure where to find that, you can find that in box B on your W-2. And as soon as you enter in that employer information and search for it, it will tell you right away whether or not it qualifies, or if they need to do a little bit more digging into that employer to see if they qualify. The beautiful thing about this PSLF help tool is that it helps generate something called the PSLF form, which is what I'm showing here on the screen here. This form then needs to be signed by you with a wet ink signature. Super, super important. Do not do an electronic signature. And then after you sign it, you need to send it in to someone at HR who can verify your employment history at that employer. If you are a UW system employee, UW Shared Services is the entity responsible for verifying all employment history for UW system employees. Like I said, I recommend using this tool at least once per year to help document your PSLF eligible employment history. And always, always, always keep a copy of the signed form for yourself for record keeping purposes. If you have multiple employers, which a lot of people do, because you can work at multiple qualifying employers throughout the course of those 120 payments, you don't have to stay with the same employer the entire time. You will have a separate PSLF form for each separate employer. And so let's say as well, sometimes people will leave an employer, then come back. So let's say someone worked at UW, then maybe they went to DOT, Department of Transportation, which is also a qualifying employer, but then they came back to UW. Even though UW is obviously the same employer both times, you will still have a separate PSLF form for both scenarios because you left and then came back. So you have to account for that gap there. So you'll have two PSLF forms for UW system. So a quick note about tracking employment history. As a result of this limited waiver that's going on, which I'm going to talk more about in a second, many people are now looking into PSLF as a suitable option for them again. And so if you realize that many more of your payments now qualify because of the waiver and you want to pursue public service loan forgiveness, like I said before, you can backtrack employment history to get credit for past payments made if you haven't tracked any of it up until this point. So whether you've worked at the DOT for 5 years or 10 years or 15 or 20, please, please, please backtrack your employment history if you haven't already. And you do that by filling out the PSLF help tool. So the PSLF help tool is a tool on studentaid.gov. You log in, you start entering your employment information. It will ask you for the employer identification number, which you can find in box B of your W-2, excuse me. And it will help fill out a lot of that PSLF form for you. You'll then have to print it, sign it with a wet ink signature because Mohila and Fed Loan Servicing have been really picky about the signatures. Then you'll send it in to someone at HR, and please ask them to sign it with a wet ink signature as well. You'll then upload or send the form into Mohila. So Mohila is the new federal student loan servicer responsible for servicing PSLF eligible loans. It used to be Fed Loan Servicing, but they are ending their contract at the end of 2022. And so they are working on transferring their accounts to Mohila. Then Mohila will update your PSLF eligible payment count based on your employment history once they've had a chance to review your form. Many people, so this is a lot of paperwork to keep track of. So a lot of times, many folks aren't sure if they have submitted a form for their employer or not. If you are not sure, please, please, please submit another one by October 31st of 2022 at the very latest. It is much better to be safe than sorry. And this is in accordance with the guidance on studentaid.gov as well. So they're also recommending that folks submit a PSLF form for each period of PSLF eligible employment if they aren't sure if they have submitted one already. So please make sure to do this. This is a super important part about pursuing public service loan forgiveness. Now for the most exciting part, I'm going to do a deeper dive into the limited PSLF waiver that I've alluded to many times throughout this presentation already. So I'm going to be talking about what it is, what this means for you and what you need to do in order to benefit from it and when you need to do everything by, because this is why it has limited in the name. It is a time limited opportunity. We have a little more than 2 months to go until it expires as of today, based on the guidance we know to be true, which is on August 23rd, 2022. But I'm going to talk about the limited PSLF waiver. And like I said, this is super exciting because this has really allowed more people to be eligible for PSLF. And I'm going to share why in just a second. What is the limited PSLF waiver? The limited PSLF waiver refers to the time-limited changes to PSLF rules that allow borrowers to receive credit for past periods of repayment that would otherwise not qualify for PSLF. This opportunity ends on October 31st of 2022. It was announced by the Biden administration in early October 2021 and went into effect October 6th of 2021. This is truly unprecedented in that the Biden administration is basically relaxing or waiving many of the different rules of public service loan forgiveness in order to help borrowers get credit for past payments that would not ordinarily count for PSLF. So really, really important. And this screenshot was taken recently on the studentaid.gov website. At the end of this slideshow, I have a wonderful link I have a link to the studentaid.gov PSLF limited waiver page. But so the first part of this presentation, like I said, I was presenting on the normal PSLF requirements. So for example, you can only receive credit for payments on direct loans, and you can only have direct loans forgiven under PSLF. You have to be making payments under the 10-year standard repayment plan or one of the 4 income-driven repayment plan. Otherwise, the payment does not count. You also need to make on-time payments for the full amount due while working full-time for a qualifying employer in order to receive credit. And you also need to be working for a qualifying employer at the time of application and forgiveness, meaning when you submit that final PSLF form saying that you think that you've made 120 payments, you need to be working for a PSLF qualifying employer at that time. Not all of these requirements, but many of these changes are waived until October 31st of 2022. Now you can receive credit for periods of repayment on direct and FFEL or Perkins loans. As a reminder, FFEL and Perkins loans don't normally count for public service loan forgiveness, but they do now underneath this temporary waiver. So payments made towards your Perkins and FFEL loans now count, but you still absolutely need to consolidate FFEL and or Perkins loans by October 31st of 2022 in order to get credit for those past payments. And now temporarily, periods of repayment under any repayment plan count. So if you were on the extended graduated plan, for example, or maybe you were on a 20 or 30-year standard plan before, which is really common for folks who consolidated their loans, those payments now count. So do periods of repayment where payments were maybe late or for less than the amount due. And now as well, periods of repayment on loans before consolidation count, even if paid or for less than the amount due. This is also a really big deal because usually when you consolidate, it creates a brand new direct consolidation loan. And because it creates a brand new loan, any payments that the loan borrower made on the loans prior to consolidation would not count towards PSLF, but now those payments do count. And now as well, you can get forgiveness even if you're not employed or not employed by a qualifying employer at the time of application and forgiveness. So for those of you who are listening who maybe worked at a qualifying employer for at least 10 years after October 2nd of 2007, you can now apply for loan forgiveness even if you're working in the private industry right now. So because you made those hopefully 10 years of payments before, you should absolutely apply for loan forgiveness to get credit for that. So these are amazing changes. And so for those of you who are listening, and if you're trying to figure out if you should look into this, you 100% need to look into this. I cannot recommend this enough. Some of these requirements have not been changed. So you still need to make 120 qualifying payments or the equivalent. So they have not decreased the 10-year portion of the plan. You also still need to be employed by a government, 501c3 not-for-profit, or other not-for-profit organization that provides a qualifying service. So as a friendly reminder, employment at a for-profit organization does not qualify. So that requirement is not changed. It's a very strict requirement in that in order to have your past payments count and current and future payments count, you need to have made that payment while working for a PSLF qualifying employer. You also need to still be working full-time, or you need to have been working full-time while making those payments. And as a reminder, for PSLF, you're generally considered to work full-time if you meet your employer's definition of full-time or work at least 30 hours per week on average, whichever is greater. You still need to have direct loans also in order to get those loans forgiven. And for those of you listening who may have those Perkins or FEL or FELP loans that we talked about earlier, you still need to consolidate those into a direct consolidation loan by the waiver deadline of October 31st of 2022. So in order to get credit for the payments that you would have made underneath those FEL or FELP or Perkins loans, you need to consolidate them. That is a very important piece because this is one of the biggest reasons why folks are getting denied forgiveness is that they are applying for forgiveness because they think that they've made 120 payments. However, when the loan servicer is reviewing their application, they're noticing that they still have FEL or Perkins loans. The government will not forgive those FEL or FELP or Perkins loans unless they are consolidated into a direct consolidation loan. And you also need to still certify the qualifying employment for the periods you seek credit towards PSLF. So you absolutely need to fill out that PSLF form for any and all periods of PSLF qualifying employment. So if you have held multiple jobs at different qualifying employers, you should absolutely have a different PSLF form for each of those periods of qualifying employment. If you have worked at the same exact employer for over 10 years, you may just have one PSLF form that verifies that your start date was a certain date, and then 10 years later, you either stopped working there or you're still working there. And these are, like I said, all screenshots on studentaid.gov. This is a really nice, beautiful summary of the key points of the changes due to the limited waiver. So like I said, for a limited time, you may receive credit for past periods of repayment on loans that would otherwise not qualify for PSLF. The second bullet point is very, very important. It reads that if you have FEL program loans or federal Perkins loans or other federal student loans, you'll need to consolidate your loans into a direct consolidation loan to qualify for PSLF, both in general and under the new time-limited rules described on this page. Before you consolidate, though, please make sure to check to see that you do work for a qualifying employer. So that's really, really important. And they also have linked here the pros and cons of consolidating your loans. This is a really important but confusing note, and I'm seeing some servicers give incorrect guidance on that. Is like I said before, before this time-limited waiver was announced, whenever someone consolidated, it created a brand new loan. So it would reset that borrower's PSLF eligible payment count to 0 because it's a brand new loan. However, underneath this time-limited waiver, if you consolidate, you can still get credit for those past payments made on the Perkins or FELP loans before you consolidated. So if you wait until November 1st of 2022 to consolidate, you cannot get credit for the payments you may have made under the Perkins and FEL loans. So very, very important to consolidate your loans if you need to. Another really unique feature is that forbearance periods of 12 consecutive months or greater, or 36 cumulative months or greater, will also count under the waiver. And so in fall of 2022, the Department of Ed will begin making account adjustments to include these periods. And then forbearance periods provided by the COVID-19 emergency relief flexibilities are not included towards these months. So this is really common in that if someone couldn't afford their monthly payments, their servicer may have put them into forbearance. So if that applies to you and it was a at least 12 consecutive months or greater, or maybe you have 36 cumulative months or greater, those periods of forbearance will now count. And we're not counting the months spent in the COVID forbearance towards that number. We do know that this COVID forbearance period does count towards PSLF. But for this unique rule about those past periods of forbearance counting, we do not include the COVID forbearance in that. For those of you who maybe spent time in deferment prior to 2013, those months spent in deferment will also count under the waiver. And if you had an economic hardship deferment on or after January 1st of 2013, those periods of deferment will also now count towards PSLF. However, periods of default and in-school deferment still do not qualify. So like I said, I went into an in-school deferment. I didn't catch it in time, so I cannot get that removed from my account because I didn't get it proactively removed ahead of time. If you are in default, please reach out to your student loan servicer or the servicing body that's servicing your defaulted loans and ask them how you can get out of it. Because of this COVID forbearance, there is a really good chance that you can get out of default because this time spent in the COVID forbearance may have allowed you to get out of default. So please, 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 if you are in default, I know it can be a very stressful and sometimes sad and anxiety-inducing situation, and I really do empathize with you. I want to make sure that you use this time to your advantage. So please reach out to your student loan servicer or the servicing body that's servicing those defaulted loans and ask them how you can get out of default. And then you'll want to get on an income-driven repayment plan or get put into the COVID forbearance immediately so that you can start earning credit for PSLF payments again. And like we said before, and like it says at the bottom of the slide, the qualifying employment requirement has not changed. So now that we kind of know just how much has changed and how much will be in effect through October of this year, what do you need to do? So the action or actions you need to take completely depend on the type of loan or loans you currently have outstanding. And I have linked a really helpful page on studentaid.gov that lists the different action steps, but I'm also going to go through it and break it down for everybody over the course of these next few slides. So this applies to everybody. The number one best step or best place to start is to review your federal loans. So step number one, log into studentaid.gov. Everybody has a studentaid.gov account because this is where you would have filled out the FAFSA when you were in school, for example. Studentaid.gov is different than your loan servicer's website, but it has a very amazing comprehensive history of all of your federal aid. So once you get logged in, you'll be automatically redirected to your own personalized dashboard, and then you'll click on, you'll go to the My Aid box, which is towards the top, and you're going to want to click on View Details within the My Aid box. Then you're going to click on View Breakdown next to the number of loans you have. So you'll see that View Breakdown button, and then it will give you the option to look at your loans one by one if you have multiple loans. The thing that's really important is that you will want to carefully click through each outstanding loan and note whether you see direct, FEL or FELP, or Perkins in the loan name. So very, very important. Get logged in, click through each outstanding loan, and by outstanding loan, I mean it has a balance of at least 1 penny or more. And please note whether you see direct, FEL, or Perkins in the loan name. It will have one of these three, so be sure to read carefully. For those of you who click through and you notice that you have an outstanding FEL and or Perkins loan, step number 2 for you is to consolidate. This is so important. This is probably the most important part of this entire process for those loan borrowers with outstanding FEL or Perkins loans. If you have any outstanding Perkins and or FEL loans whatsoever, you absolutely need to consolidate them on studentaid.gov by October 31st of 2022 in order to utilize the limited waiver. And I do not recommend waiting. You need to do this as soon as possible because it can take upward, anywhere between 30 and 90 days for that consolidation application to be processed. It's free. So the consolidation process is free. It's different than privately refinancing. So do not privately refinance your loans with a private lender. All that the consolidation process does is it takes your Perkins and Fell loans and any other loans, federal loans you decide to consolidate, and it converts them into a brand new direct consolidation loan. So it takes all of those separate loans and converts them into brand new direct consolidation loan. When you consolidate, your interest rate will change. And so what it will do is it will calculate the weighted average interest rate of all of the loans you chose to consolidate and round it up to the nearest 1/8 of a percentage point. And that's going to be your new interest rate for that brand new direct consolidation loan. And in the consolidation application, it should show you what your interest rate is going to be right away. So consolidating them by October 31st of 2022 accomplishes two things. It converts them into a federal direct consolidation loan so that they are now eligible for PSLF, and it helps you get credit for past payments made towards PSLF, even though those payments were made while they were still Perkins or Fell loans. If you wait until after this waiver deadline to consolidate, they'll still be converted into a federal direct consolidation loan, but you will not get any credit for past payments made. So you basically will be starting the PSLF clock all over again at payment 0. Very important. I really cannot emphasize this enough, as I'm sure you can tell. And so I'm so sorry that I feel like I don't mean to be harping on folks, but this is so important. And this is definitely the most confusing part of the process, I would say. And so, like I said, you consolidate on studentaid.gov. It does need to be completed in one sitting. It's free to do, and it probably takes between 20 and 30 minutes to go through the entire application. If you are curious as to what the application looks like, I did link a read-only version of the application here. And like I said, the studentaid.gov website is super thorough. They've done a really great job of walking loan borrowers through these steps. And so you can find more information on all of these action steps on the linked page as well. I do get a lot of questions about consolidating, and so I did put in a slide just to help really enforce this idea of consolidation. So consolidating is the act of combining your federal student loans into one new federal direct consolidation loan. And like I said, once the application is submitted by you, it's an electronic application, and then it will take between 30 and 90 days to be processed once it's submitted. You don't have to necessarily consolidate all of your federal student loans. When you log into the direct consolidation application, it will automatically list all of your outstanding federal loans, but you can deselect the ones that you don't want to consolidate and select the ones that you do want to consolidate. Because consolidation creates a new loan, it usually restarts the payment clock towards PSLF, like I just said. However, like I've shared before, this rule is temporarily waived under the limited PSLF waiver, and any payment made prior to consolidating will now count towards PSLF, as long as you fill out and submit the PSLF forms for PSLF eligible employment during that time period. So I have more info on this coming up. And I cannot say this enough. Thanks for bearing with me, folks. But Perkins and or Fell or FELP loan holders need to consolidate them by October 31st of 2022 so that they can be converted into a direct loan and become eligible for public service loan forgiveness, and so you can get credit for past payments that you've made. I have unfortunately been hearing a lot of misinformation about consolidation out there regarding advice that folks have been given from different places. You absolutely do need to consolidate if you have Perkins or Fell loans. There's no way around it. If you are sure that you want to pursue PSLF and you want to get credit for any past payments that you've made, you absolutely need to consolidate by October 31st of 2022. I would not wait. I would do this as soon as possible. And then step 2, for those of you, like if you go through your outstanding loans and you only see direct loans in the name, you don't necessarily need to consolidate because you have outstanding direct loans. So if you have direct loans, you do have the correct type of loans for PSLF. However, this is a really unique feature of the waiver, and I'm going to do a pretty thorough deep dive into this too. If you have multiple outstanding direct loans and you think that they may have different counts of PSLF qualifying payments, underneath this limited waiver, you can consolidate them so that way the new direct consolidation loan receives the higher PSLF qualifying payment count of all the loans you decided to consolidate together. This is something that the Department of Education did not announce right away when we went into this COVID forbearance. This is relatively new guidance that many borrowers are not aware of. And so I have a separate slide that talks more about consolidating different federal loans with different PSLF qualifying payment counts. And the screenshot that I included on the left here is a screenshot that I took yesterday on August 22nd of 2022 on the studentaid.gov page. So the question reads, I am already in PSLF and I have direct loans that have different payment counts. Should I consolidate my direct loans? And it reads, under the time-limited PSLF rule changes, your consolidation loan will receive credit for time and repayment on your loans with different counts. Your consolidation loan will be credited with at least the largest number of payments on the loans that were consolidated. So this is a wonderful, less known feature of the limited waiver. And this applies to both those with outstanding direct loans only and those with a mix of outstanding loans. So FEL, Perkins, and or direct loans. And this only applies to folks who have at least two types of outstanding loans. So you can technically consolidate a loan by itself, but there would be no benefit to doing that because if you are planning on pursuing the consolidation process for this reason, you need to have at least two different types. In order to benefit from this feature of the limited waiver, you need to consolidate and submit a PSLF form for all periods of qualifying employment by October 31st of 2022. So I have seen folks benefit from this already, and this is especially prevalent for those of you who maybe went to undergrad and then worked for a little bit after graduating at a PSLF eligible employer. And then let's say you went back to school for a grad degree. And then once you graduated from your graduate program, you continued working at a different eligible employer. You should consolidate or consider consolidating your undergrad and your grad school loans together so that the brand new resulting direct consolidation loan will be given the higher payment count. And so my recommendation is if you are in this category, please consolidate your loans after looking into it. Like, please do more research and reading up on the consolidation process and what it means for you and what happens if and when you do consolidate. You need to consolidate. And within the consolidation application, you should indicate that you want your new servicer to be MOHELA. And you will see exactly what I'm talking about. It's a question on the bottom of the first page of the consolidation process. It will ask you if you're planning on pursuing PSLF. And if so, you should indicate that you want your new direct consolidation loan to be serviced by MOHELA. What will happen then is MOHELA will receive your consolidation application. They will start processing it as quickly as possible. And then you will get an email as soon as that consolidation loan has been processed. At that point in time, that is then when you submit your PSLF forms to MOHELA for processing. So consolidate first, wait for that consolidation loan to be processed, and then submit the PSLF form. With that said, as of today, this waiver is set to expire on October 31st of 2022. So for folks who maybe do this closer to the deadline and don't have time to wait for the consolidation process to be completed, that's totally fine. Consolidate your loans and submit the PSLF forms for all periods of qualifying employment by October 31st of 2022 in order to benefit from this waiver. And that's what I'm basically saying here is that step number 3, regardless of whether you consolidate or not, you need to verify periods of PSLF qualifying employment. So once you receive word that the direct consolidation loan has been processed, or if you decide that you don't need to consolidate because you have direct loans and maybe you think that they have the same number of PSLF qualifying payments made, you don't necessarily need to consolidate. So you don't need to wait for that direct consolidation loan to be processed. You can skip ahead to this step and use the PSLF help tool to generate the PSLF form for all periods of PSLF qualifying employment since October of 2007. Like I said before, each employer will have its own PSLF form. Please ask your employer to sign it with a pen, and you will need to do the same, because I am seeing forms get denied if folks submit it with an electronic signature. So please make sure to print it out. You know, once you go through the PSLF help tool, the end portion will give you an option to download the forms, and you will have a form for each eligible employer. You should print those out, date it, and sign it with a pen, and then scan it. And I have the Adobe, if you have a smartphone or an iPad, I recommend the free Adobe Scan app. And then you can use your phone or an iPad or some other mobile device to scan the form and then send it to your employer, so that way they can sign off on a pen and send it back to you. So I do recommend sending it to your employer as soon as possible, asking them to print it out and sign it with a pen, and then have them sign it back to you. Please, 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 when you get that back from HR, scan it and make a copy for yourself and save it somewhere safe. And then also review the forms as well. So please go through the different questions and make sure that human resources filled it out correctly, because if something's missing or if something's incorrect, there's a chance that the form will be denied. And so please review the forms, and then you'll need to send it to MOHELA for processing. And there are more directions on the form itself. If you consolidate, you will indicate that your loans should be moved from whichever servicer they're at now to MOHELA. You will then be able to upload the PSLF help tool form, or the PSLF form, into your MOHELA account for processing. If your loans aren't already with MOHELA, you will not be able to upload it electronically into an account with MOHELA, because you don't have an account with them, because they are not currently your servicer. So you will either have to mail them via the mail or fax them. I've been myself personally been experiencing issues with the mail, unfortunately. So I do think fax is probably safer and quicker. But I also understand that not everybody has access to a fax. I'm pretty sure there are websites you can use to send an electronic fax. So you could absolutely look into that portion. Otherwise, you will have to send it through the mail. And then once MOHELA gets the form from you, they're letting folks know that it will take them up to 120 days to process the form. And so this form is what allows them to count your PSLF qualifying payments. They will have no record of a PSLF eligible payment count for you unless you submit this PSLF form. To be clear, based on all of the guidance I'm reading on studentaid.gov, these PSLF forms don't need to be processed by the October 31st of 2022 deadline. They just need to be submitted by that deadline. I'm really hopeful that this PSLF limited waiver deadline of October 31st does eventually get extended, but we'll see. Fingers crossed. Hopefully we hear something within the next week and a half, but unfortunately I can't promise anything. Really common FAQ is, are Parent Plus loans eligible for the waiver? The short answer is that it unfortunately depends. The long answer is that Parent Plus loans alone are not eligible for the waiver, even if you consolidate them into a direct consolidation loan. However, Parent Plus loans can become eligible for the waiver if they're consolidated with other federal loans that the borrower took out for their own education. This is a really complex and more complicated nuance of it's very nuanced, more complicated piece of the waiver and Parent Plus loans. And so I've linked a really helpful web page on the studentaid.gov page here. But I also took this screenshot yesterday on the studentaid.gov's PSLF limited waiver page and in the FAQ section. And so I've linked that at the end of the slide too. But the question reads, I am a Parent Plus borrower thinking about consolidating my Parent Plus loans with my other federal student loans in order to maximize the benefits of the limited PSLF waiver. What should I think about before I consolidate? So it reads, a new consolidation loan can receive credits for payments made to underlying loans that were not Parent Plus loans. However, the new consolidation loan will still be credited with any payments you made to other non-Parent Plus FFEL, Perkins, or direct loans. No credits are awarded for payments made to defaulted loans as usual. When the new consolidation loan reaches 120 qualifying payments, then the consolidation loan can be forgiven under PSLF, even if some of the loans consolidated into the new loan were Parent Plus loans. However, if you consolidate only Parent Plus loans, whether they are FFEL and or direct Parent Plus loans, then the new consolidation loan would not be credited with any payments made to the underlying loans. So to be very clear, the Parent Plus loans are only eligible for this limited waiver if they are consolidated with other federal loans, other federal non-Parent Plus loans, and non-FFEL loans that that the borrower took out for their name. So very, very important is that if you have Parent Plus loans and you are wanting to benefit from this PSLF limited waiver, you need to consolidate them with other federal loans that you took out in your name for your own education. All right, folks, thanks for bearing with me. I know we've been covering a lot of information, and so I really appreciate your attention. I did just want to end the presentation with a few FAQs that I've received over the past few months that have come up pretty frequently. So really common question, do the 120 payments need to be made consecutively for PSLF? No, they do not. Folks will sometimes have breaks in the payments if they switch to a non-qualifying employer for amount of time. So they do not need to be consecutive. They do not need to be made at the same employer. The most important thing is that you just have 120 PSLF qualifying payments that were made while you were working for a qualifying employer. It doesn't need to be consecutive. It doesn't need to be at the same employer. Another really good question, can I still benefit from this limited waiver even though I don't think I have made 120 parents? And I want to answer emphatically that absolutely. It doesn't matter how far along you are in the PSLF process. If you want to ensure that past payments now count towards PSLF, or maybe you want to take advantage of that consolidation loophole that I talked about previously about giving the higher PSLF payment count to that brand new direct consolidation loan, I do strongly encourage you to consolidate if you need and or want to, and submit a PSLF form for all periods of eligible employment by October 31st of 2022. So whether you think you've made, you have 4 years of payments, or let's say like 15 or 20 or even 25, it doesn't matter how far along you are in the PSLF process, anybody can potentially benefit from this waiver. You just need to consolidate potentially depending on the type of loans you have. And you absolutely, regardless of the types of loans you have, you definitely need to submit a PSLF form for all periods of eligible employment by the limited waiver deadline. Another really good question is, can I get credit for past payments I made under a different servicer? So as a friendly reminder, there are a handful of different loan servicers, and whenever a loan borrower takes out a federal student loan, they're assigned automatically randomly to a different loan servicer. The answer to this is yes. Even though Fed Loan Servicing was the PSLF loan servicer and now MOHELA is the new PSLF loan servicer, you can still make PSLF eligible payments while your loans are with a different servicer. So if I'm with Great Lakes, for example, I can still be making PSLF eligible payments while I'm with Great Lakes. With that said, though, like I said, as you're pursuing PSLF, whether it's the typical PSLF program or you're wanting to benefit from this waiver, you need to submit that PSLF form for all periods of qualifying employment. And when a borrower submits that form to MOHELA, your loans will automatically be transferred to MOHELA after you submit that PSLF form. Another FAQ, I privately refinanced my federal loans back when interest rates were super low. Can I undo this? And like I said before, it hurts to share this with folks because I know it's such bad news and I'm so sorry. Unfortunately, you cannot, because once a federal loan has been privately refinanced, you can't undo it. And unfortunately, there's no way to convert a private student loan to a federal student loan. Another common question is, I am a 1099 independent contractor. Does this type of employment count towards public service loan forgiveness? And unfortunately, time spent working as a 1099 employee does not count because you're technically working for an independent contracting company. So I see this a lot with ER physicians that maybe they are performing services at a qualifying hospital like UW Health, for example, but they're technically a 1099 employee being paid by an independent contracting company. And so folks who are in that situation or a similar situation, that time would not count because you are technically being paid and you're being employed by the contracting company, and you are a 1099 employee. You're not technically an employee of UW Health, for example. So that time does not count towards PSLF. All right, folks, I am at the end of my slideshow here. I really just want to thank you so much for bearing with me. I know that this is a lot of information to cover, and I hope that it was helpful. So we did a very deep dive into PSLF and the limited waiver. I hope that it's helpful in terms of breaking down the different requirements of public service loan forgiveness, while also sharing more information about the limited waiver and what, if anything, you need to do to potentially benefit from the waiver. I really appreciate your time and attention, and I hope you found this helpful. If you are looking for additional resources, which is super common, I've linked a lot of resources that I personally use very, very frequently. And I've broken them up into different categories based on your learning style and preference. So for example, I love FAQs because it's really interesting to hear what other people's questions are. And so I have a handful of different FAQ style resources here that I trust wholeheartedly. And they are both about the PSLF program and the PSLF limited waiver. So definitely check these out if you like the FAQ style resources. I also link a lot of the common web pages and websites I use that are full of a ton of information and can lead you to other really helpful resources as well. For UW system employees who are tuning in, I also included a link to the UW Shared Services website that has more information about how you can verify your employment through UW Shared Services office. And throughout this presentation, I talked a lot about these different application tools and simulators and applications and things like that. So I have them all linked here, including the PSLF help tool. I've linked to a copy of the PSLF form in case you're curious as to what that looks like. I have some loan simulators and calculators linked here as well, and then the consolidation application on studentaid.gov. If you are someone that really likes apps, I'm not a huge app person, I'll be honest, but this Savvy Student Loan Relief app is wonderful. It's free for Wisconsin state employees. And so if you think an app would be helpful, it can help talk you through PSLF and how to get those forms verified. So Savvy is an awesome app if you like to use apps. It's designed to help talk and walk folks through public service loan forgiveness and to help make sure that you are working towards it and to help get credit for past payments made. Other resources that have been popping up, these aren't necessarily like professional or like government-owned resources, but they're really, really helpful because you can hear from other folks and their journeys towards PSLF. So I did link the Reddit PSLF subreddit communities page, and I've also linked this really popular Facebook page. It's the Public Service Loan Forgiveness Program Support PSLF page. It's a private group, so you do have to request to join. It's very active with nearly 140,000 members, and there are posts every single day. Both of these have I've seen a lot of helpful posts just in terms of folks helping answer questions for each other, helping disseminate really important information and help just helping folks throughout the process. And I've also seen really helpful posts about folks who have had their loans forgiven, who are sharing the timeline of everything. So really important if you are someone who learns through others. Like I've really enjoyed looking at both of these resources. And then lastly, sometimes it can be really helpful to talk with someone one-on-one. And so I do have two of these wonderful advising resources linked here. If you are a Wisconsin resident and you went to a Wisconsin school, or maybe you're just a Wisconsin resident, you can call the Wisconsin Student Loan Debt Coalition hotline where you can talk to someone one-on-one, super knowledgeable. I have more information about it linked, and there's their toll-free phone number as well if you want to call and talk to someone about public service loan forgiveness or any questions you have about student loans. Another wonderful organization is Access Lex. I actually got a research grant through them, and they are just fantastic to work with. They also offer free virtual one-on-one financial coaching, and I've also linked more information there. And I've also linked it to their Calendly page where you can see the different folks that you're able to meet with. and they do tend to specialize in certain topics. So a few of them do specialize in student loan and PSLF, so you're able to access that here. With that said, that is the end of my presentation. I just want to profusely thank you again for your time and attention today. I know that this can be a really stressful and confusing topic to go through, but due to the limited waiver, my colleagues and I are trying to raise awareness of public service loan forgiveness and its limited waiver, however and whenever we can. So please do feel free to share this presentation with others as well who you think may be able to benefit. Really quick, just as a friendly reminder before we head out today, the COVID forbearance is set to end after October, sorry, ignore that, sorry. The COVID forbearance is set to end after August 31st of 2022. After that, we would all be kicked into repayment. However, I am optimistic that that will be extended. I'm just waiting for an official announcement from the Biden administration, which hasn't happened yet. So I can't guarantee it, but I'm very optimistic. I'm also optimistic that the limited PSLF waiver deadline will be extended past that October 31st, 2022 deadline, but I can't guarantee it. So, but until we hear anything otherwise, please do continue to move forward as if that's going to expire after October 31st of 2022. I'm also curious whether or not there will be some sort of blanket loan forgiveness. I think as the days go on, I'm becoming more optimistic, but that also remains to be seen as well. So I think the most important thing you can do now is to do a deep dive into your student loans and to verify the type of loans you have, and then to either consolidate if you need to or want to, and then to also submit those PSLF forms for any period of PSLF eligible employment. And like I said, please do keep an eye and an ear out for any important announcements from the Department of Education and or the Biden administration about any of those deadlines changing. But as of today, Tuesday, August 23rd, 2022, all of the deadlines I've included in this presentation stand, so let's proceed that way. All right, thank you so much, folks. It's been a pleasure to present this information to you. Thank you so much for your time and attention today. I really, really appreciate it, and I hope you have a great rest of your day. Thank you so much. Bye.